Hi and welcome to the 12th issue of my newsletter as for advanced traders. Today we will cover the multi-time frame analysis and trading. Knowledge is power is a great quote by Sir Francis Bacon. Today I will go over multiple time frame analysis. If you were not using this way of trading until now, I highly recommend that you start applying it. I guarantee you that your results will improve tremendously once you start doing that, and you will understand the big picture. Introduction to multi-time frame analysis is one of the things we will have today, as well as why you should analyze multi-time frames, how to trade on the best time frames using the multi-time frames, and how to apply multi-time frames analysis to your trading. At the end of this video you get great gift called DTE Dynamic Triple Edge. So what does the multi-time frame analysis mean in reality? It is the process of analyzing multiple time frames in order to get the most extensive and accurate view of the instrument you want to trade. So for example, if you are trading the euro dollar on the 1 hour chart, you want to go up and analyze the 4 hour and the daily chart to get the bigger picture, just to know where the wind blows. 1 hour chart could be currently in a downtrend, but that might be only part of correction that is taking place on the higher time frames. Hence, trading short would lower your chances of success. By consulting with the higher time frames, you make sure that you are trading only in the direction of the higher time frames trend. This way the edge is on your side. Let's look on examples. This is daily chart. It is pretty clear that the trend is bearish here. Bearish means down, of course, right? Price is making lower highs. Now let's drop down to 1 hour chart, for example, and see what we get. And the picture here looks completely different. Price is making higher lows, indicating an uptrend on this short term, short compared to the daily time frame, of course. So the main idea here would be to find sell entries, because the higher time frame is in a downtrend, rather than looking for buy entries. Makes sense, right? Join the strong force, right? If you can't beat them, join them. You know this saying. Of course, there are cases when you can look for long entries in such situation, but as for now, let's stick to the basics as the favors in our sides when we join the big forces. The reason is only one, and it's very simple actually. To make more money, or to trade more accurate, to have the chances on your side. So you can stick to one chart only, but this would be equivalent like driving your car without both side mirrors and without the rear view mirror. Dangerous, isn't it? Only looking straight ahead. Does it sound smart to do? Well, right? So the same logic applies to trading. You want to look around. You want to see what's the general situations behind you and on your side, not just what's in front of you. So the best time frames to trade, and actually that's mainly depends on your trading style and account size, of course. Now this chart, okay, is a great one. Statistically, this is how the two curves look like based on trading style. Why? Because scalping is one of the toughest trading styles, but at the same time it's very seducing for many newbies and pro traders due to the high potential reward in short time, sometimes even no time. While on the other hand, investing requires very little time in front of your chart and the computer, and the risk is much smaller versus potential profits, but very big account is required here, which makes it really not suitable for the majority of traders, at least at the beginning of their journeys. So which one best? It really depends on your situations. How big is your account? How much time you want to dedicate to trade. My personal favorite is somewhere in between. Even though occasionally I will be involved in short-term trades like 15 minutes to enter my trade as well as investment. Majority of my trades are executed on the 1-hour chart or 4-hour chart with combinations of daily and weekly charts to find the bigger direction. Now let's see how exactly to apply multi-time frame analysis in your trading. First of all, you should know which time frame you want to trade. Assuming you prefer shorter term action, let's go with 1-hour chart. Now you can check the higher time frames like 4-hour chart and daily chart to see the general picture of the market. Ranging, trading up, trading down. Clearly and obviously this instrument, the Australian versus the dollar, is going up. This is an uptrend. So we are going down as low as the 4-hour chart, 1-hour chart. We will use 1-hour chart for this example to find for entries. This is how the 1-hour chart looks like. A very basic naked chart without any indicator or additional tools, right? Trade would be this breakout entry. So basically I will be looking just for pullbacks to jump in. That was the first one, that was the second one, the third one, the first one, and so on. Every pullback I get, ideally in few wavings, okay, ideally, okay, just one pullback is not enough, of course, like here, okay, I will want few wavings, then I connect the trend lines. And here you go. That's very, very powerful. Of course, you can apply your own strategy and tools, and I'm sure you will get amazing results. But this is the main idea of how to use multi-time frame analysis. Let's see one more example. This is obviously a downtrend. Now let's drop down to 4-hour chart or 1-hour chart, and that's what we got. We got this kind of a range pattern. Okay, see that? We are moving. I love moves. I love moves again. It's not just one pullback, small pullback, small pullback. I don't like it. I like moves like here. Okay, then the breakout like here, like here. Okay, I like that. That's what gave you the best entries. Okay. That's the idea. So, all in all, it's pretty simple. And yet, very effective, isn't it? Now, imagine what happens when you apply Fibonacci levels, which we have learned, trend lines, candlesticks, divergences, cycles, waves, and so on. You just get master trading level. Remember that every single tool or method that you apply on your chart or analysis should be there with one reason only: to give you better edge and confirmation of what other tools are saying and showing. Once your trend line, wave count, divergence all confirm buy or sell, you have an edge. Your chances are very high on your favor. That's basically all. Go and download the DTE, Dynamic Triple Edge. You will enjoy it, guaranteed. Just follow the rules. This is the contact details, my Skype and the support team email. Feel free to contact us. We are here for you for any question and here for your success. Thank you very much for your time. I wish you best. Vladimir Ribakov.